Hi guys, welcome to another video by Optionables. My name is Saket and in this video we are going to review the trades taken on 28th of September 2021. So today was one of the most volatile days what we have witnessed in some time. And Bank Nifty almost crashed around 800-900 points in the morning from the high and later recovered close to 700 points in last 1 hour alone. So obviously when you expect such huge volatility, we would be in a loss, because what happened was when the market started to come down, we adjusted our positions quite well because it was a gradual fall. So when that was happening, we started shorting additional call options on the top. We also purchased some additional hedge. So we managed the position quite well and we were at a profit of close to 3 lakh when the market actually came down. But the bounce was so intense that we didn't even get an opportunity to adjust while it was bouncing back. So when this particular thing happened, all our gains washed out. From 3 lakh we came to 0. Not just that, from that we further went to a negative 3 lakh. And once we hit negative 3 lakh, we decided to book all the trades. So totally we booked a loss of 3 lakh because of the volatile markets. One good thing what we can take away from this trade is that we stuck to our risk framework. So we only risked 3 lakh and the moment we hit 3 lakh, we just came out of the positions. And this was when Bank Nifty actually touched around 37,700 while it was bouncing back. If I had actually let it run, and if I had actually let it go till 38,000 or 37,900, the loss could have also gone close to 7 to 8 lakh. So here we did a good thing that we were out of this position quickly when we realized that it is getting out of our hands. So even though we booked a loss of 3 lakh, it is absolutely fine because we will be able to recover this in a week or so. But it's always important for us to make sure that we always stick to our risk framework. Now we'll be quickly moving on and we will try to understand what was the mindset or psychology while this entire thing was happening. Then I will also show you what are the new positions which we entered, and we will also see some market data and try to see what is the market view. Thank you so much for joining guys, and if you are liking this video then do hit the like button, share as well as subscribe. Thank you. Before we start off with this video, I would like to show you about QuantsLeague. This is an option trading conference which is one of its kind, and top industry experts such as Rajendran sir, Nitesh Narang, Prateek Singh. So all these people will be joining in and they will be having sessions. So this has already been started, and if you haven't yet registered, then do check this out and register as soon as possible. So for the sessions which are already over, you will also be getting the recording. Hi guys, welcome to another video by Optionables. And as you can see here, we have a total loss of 3 lakh as of today. So today was one of the most wild days which we have witnessed, because initially Bank Nifty fell almost close to 900 points and later bounced back 800 points, leaving us with a loss of 3 lakh. So now we are going to discuss what exactly we did, and as the market started bouncing back, how our psychology played out. So trading psychology here is really important, because when such things happen, when the market is so wild and you actually start to go under huge losses, that's when you usually make irrational decisions. So it is important to understand how you can actually avoid it. So even though you go into a loss, it's absolutely fine, but the irrational decisions which you take shouldn't actually make you lose more than what you can afford. So today we will try to understand what exactly happened and how we actually dealt with it. So I am not trying to tell here what we did is the right thing. I am just going to tell at that particular point how was our mindset and why exactly did we do things which we actually did. So now if we actually look at the chart, right? So this is a chart of Bank Nifty, and throughout the day from the morning, we saw a huge sell-off in Bank Nifty. Every hour, Bank Nifty was much lower than where it was the previous hour. As the market started to come down, we started to short additional options. So that was 38,500, 38,300, 38,000. So we started to short additional call option, right? And apart from that, once Bank Nifty actually broke this level of 750, because 750 was acting as a pretty strong support for Bank Nifty. And once that level was taken out, so let me just change this to the cursor. So you can see right over here, this level was a pretty strong support for Bank Nifty. And once that got broken, we decided to buy additional hedge at 37,500. So we completely hedged our downside by buying 37,500 puts at 140 rupees. And now we were in such a position that no matter where the market went on the downside, we would never have a loss at all. So we had completely kept our downside open. So even if it came towards 36,000 tomorrow, I would never have a problem because I had completely hedged my downside position and we would definitely end in profit no matter what. But the problem was market bouncing back above 38,400. So in case if Bank Nifty actually came all the way up till here, this is when I would have a huge problem. Generally what you expect is when there is such a huge sell-off, you might expect the market to bounce back little, consolidate, and maybe again bounce back little, consolidate, and then maybe again bounce back or come down. It really depends. But what we saw today was something totally different. So we saw the Bank Nifty almost bounced back 800 points within matter of 30 to 40 minutes. And it really didn't give us any time to think. So my idea was, so this is the level at which we purchased the hedge, right? And this is the level which is going to act as a crucial resistance now. Once this level is taken out, we are going to come out of all the positions and close the trade. So that's what we exactly did. So from here, when we actually went up till here, so I had told you that I would be closing my positions if we hit 37,800. But yesterday, we actually went as per the plan. We started shorting additional call option. But at that point, we were never under a loss. We had thought that we will go into a huge loss, but we never went to a loss at all. And at this point, we had a profit of close to 3 lakh. So we were positive of 3 lakh. So there was no question of closing the trade because the market was coming down and you were never under a loss. And so why would you actually close the trade? So you thought, okay, let it come back now. That time I'll be closing the trade, right? But when this particular bounce happened, so the bounce was so severe that from a positive 3 lakh, you went to 0 at this particular point. And again, when this particular bounce occurred, you went to a negative 3 lakh. So it was a cost of close to 6 lakh in matter of just few minutes. So you lost close to 6 lakh in just 20 minutes. So this is when the psychology plays a key role. Because so in 20 minutes, I have come from positive 3 lakh to negative 3 lakh. So now the thing is, can't I make this position go to profit again? Obviously, yes, because my break even is coming at 38,400. So till Bank Nifty actually goes towards 38,400, I don't even have to worry. I don't even have to touch my position because I'll be still making profits. But that is secondary because once such things happen, you will get emotionally involved in the trade. So you will start making a lot of irrational decisions. Okay, you're like, okay, the market is bouncing up. So let me short more of puts or buy more of calls. So you will end up making decisions which otherwise you wouldn't have made at all, right? So this is something you want to avoid. So what is the problem of making such decisions? So we'll just discuss that same thing with a simple example, right? I will just open Sensibull to show you a simple example to make you understand what exactly would have happened. Let's say I had a simple short straddle and I had done an iron fly by purchasing far out of money hedge, right? So now, as you can see here, I have a perfect iron fly and let's say the market has come down. So make a note of this. So let's say you have a capital of say around 2 lakh, right? So your max loss right now is 9,000, which is close to 5%. So no matter where you go, you're just going to lose 5%. So now let's say the market starts coming down. So market will start to move in this direction. It starts coming down. So what you do is you want to have some more room on the downside. So that's why you end up shorting additional call option. So let's short some additional call option and let's make this 4 lots as well as 4 lots, right? So 3 more lots additionally we are shorting. So by doing this, you can see that on the downside, now you don't have a loss at all. But what you have done is that on the upside, you have increased from somewhere close to 9,000 to 50,000, right? So this is still okay. Why? Because let's say the market is somewhere around 37,200, right? So you still have 1,000 points for the market to go. So you won't be moving to loss so quickly because it is not easy for the market to bounce back so quickly 1,000 points unless a day like today where the market just jumps around 800 points in a couple of minutes. So otherwise, this is not something you usually see, right? So now the market has actually come down, and now on the downside you have no problem at all. You're only concerned about the upside, but upside is still around 1,000 points away. So there is nothing much to worry. But now let's say the market starts bouncing back up. And looking at this, let's say I end up shorting additional put options. Let's say 37,800. So it should be 3 lots. So what I do with this particular thing is I have definitely increased my max loss on the downside also. So before, no matter where it went, I only used to lose somewhere close to 9k. But now the situation has changed. So on the downside, I'm losing 30k. And on the upside, I'm losing close to 45k. And how much is my capital? 2 lakh. So how much is 30k on 2 lakh? 15% of my capital. And this is going to cost me somewhere close to 25% or 22.5% of my capital. The question is it really worth it? Is it really worth taking so much of risk to gain? So you might be right and you might end up making a huge sum of money. No doubt about it. But it is definitely not worth risking so much of your capital to get this trade right. Let's say you're in a loss of somewhere around 5k. That's absolutely fine. Just come out of it, because this is just going to be around 2% of your capital. And now you can easily think what is happening to the market and you can take your decisions. Now you are no longer scared that you are going to lose more. Now forget about it. Don't look where the market goes. Just give it some time, maybe half an hour or so, and later try to think what would be the ideal trade that you can end up taking now. So that's what we exactly did. We closed everything around 245 and then we waited almost till 320 before we made our next entry. So at 320, we ended up taking a new position. So now we analyzed the market. We thought what might actually happen. So after we analyzed the market, took some time out and analyzed the market, we thought we will keep some exposure more on the downside and little less exposure on the upside. So we created a short straddle initially at 38,000, 4,000 quantity. So 160 lot short straddle was created. And then, as I told you, we wanted to maintain some more exposure on the downside. So we did very close hedging. So that is at 37,700 itself, 300 points away, we purchased the hedge. So now upside is also exposed. But the thing is, if I end up buying a close hedge again, so if I end up buying a 300 point away hedge, so I am going to have a loss of 2.75 lakh in the worst case. I expect the market not to cross 38,500. So I am not really scared on the upside, but I am more concerned on the downside. So here you can see that having a similar or a close hedge on the call side is also not working out great. So what we did is we went little far away for calls and we ended up buying 38,500, 160 lots. So as you can see here, on the downside, I don't have a huge loss. I just have around 60,000 loss. Whereas on the upside, I have somewhere close to 8 lakh loss. This is our max loss. But I am okay with taking this because I expect the market to stay below 38,000 by end of this expiry. In case if I am wrong, I still get a lot of opportunities to adjust this position and reduce this loss, or I still know in the worst case max I will end up losing. So if I don't even touch this position is 8 lakh, which is going to be somewhere around 2% of the capital we are deploying. So this was the idea what we have, and this we were able to do it because we took out some time, somewhere around 40-45 minutes, for us to visualize what exactly is happening and what we can expect from tomorrow and how we can proceed. So there was no need to keep this complicated position and make this much complicated. So you can see I have closed all of this, right? So there was absolutely no need to hold all these positions and make it much complicated by shorting additional puts and buying lot of calls and making it much more messy. So with this, we have simplified our position completely, and we only have somewhere close to 4 positions open. It's important for us to see what exactly will happen to the market tomorrow. We will be catching you soon in tomorrow's video. So I'll be giving you update as to what exactly happened to our position, and I will also be telling you if we do any adjustments or so on, right? So with that, we also come to the end of this video, and I hope that you guys have liked this particular video and you got to learn something from this. If so, then please do hit the like button, share this video with your friends, as well as subscribe to our channel. Thank you so much for joining, guys, and I'll be catching you soon in the next video.